Good morning and welcome back to Almus Market Mornings. We start the day with a positive risk sentiment, especially after some serious round of updates, which is giving investors comfort yet again on a peace deal. Prospects of an interim deal is gaining traction, with Qatar saying that a proposal has been drafted. And now, of course, we don't know to what extent deals like this can be taken as absolute, primarily because we have seen both sides violating it multiple times. Moving on, today we focus on the RBI decision today. They are likely to keep rates unchanged. Now, what markets would focus on is RBI's expectations on inflation. Is the food, fuel, and monsoon-related inflationary pressures, especially due to El Nino, expected to be a big threat? And what policy might be adopted in the future? Let's understand this from JK. Good morning, sir. Ahead of the MPC decision today, what are you expecting? Any change in stance which you foresee happening?
Good morning, Swaraj. No, I don't think so because I think RBI will also be falling in line with other central banks who have adopted a wait and watch approach because the oil price, which has been the main driver of inflation in many countries, it's been quite volatile. Last week we were staring at 90, 92 breaking, and then today we are at around 85 levels, and fresh peace efforts, perhaps gaining a bit of momentum because the agreement is more related to the Hormuz Strait being made operational. There is indication, as you said, from the neutral countries about good possibility of an arrangement being put in place. So that is a big relief to the market, but still remains market still remain a bit skeptical because many times it has led to disappointment and even reversal of these agreements. So that is where we have to be. We cannot be completely overconfident about this. Now, what is indicated is that Iran is considering allowing Europe to clear out mines in the Strait of Hormuz, and this probably is a very good concession from Iran. And oil prices have, of course, fallen. Treasury yields also hit the lows on hefty, buying from the investors, suddenly latching on to the higher levels, like 2 year is down from 4.37 peak to 4.20, 10-year from 4.74 to 4.62, and 30-year also down about 10 basis points. So we'll definitely wait for a definite agreement on this to be announced. Bond markets eventually, I don't see they move too high, or the yields cannot fall uh, too far further, because yields are rallying not only because of oil but also because of the core inflation, fiscal concerns, and the debt situation, which has crossed 40 trillion mark recently. So I think we remain cautious on the bond market still. Yesterday, U.S. stocks made new highs. One of those days when both the old and the new economy companies boosted the market sentiment with their earnings reports. Dow and S&P recorded new highs, rallying about 1.8%. Nasdaq just under its all-time high, rose more than 2.5%. Adding to the sentiment was the JOLTS data, which showed that the job market is still healthy, although there was a drop in the job openings. But quits rate also fell, indicates that the employees are more confident of landing new jobs. But the economists do say that JOLTS report should be treated with caution because recently the response to the survey has declined considerably, which removes the weightage from the report as such. So as it is, Fed might see the employment situation as being healthy, and they could continue to focus on inflation. Then, of course, yen continues to remain the focus because Scott Bessent, the U.S. Treasury Secretary, also talked a lot about U.S. involvement in the yen intervention. He says that U.S. maintained a good relation with Japan and welcomed its efforts to curb excessive yen weakness, and that the stable yen is important for both U.S. and the broader Asian region. He even mentioned some of the Asian currencies who actually follow the yen's fortunes. So there is a sense of, uh, you know, um, US being involved because these moves had become too excessive. And he also expressed confidence that the Bank of Japan will take appropriate stability to stabilize the markets and increase bond buying if needed. So he's trying to talk up the yen, which to me indicates that US probably will not directly intervene more. They would probably use their the vocal intervention rather than actual intervention. So there's so probably again with the risk assets rallying and there is no further intervention, yen could slowly move towards 160 as well. And if you look at the overall dollar, it's not much of a movement, just a gradual down move in the dollar, or rather the euro on the up move. Nothing significant, still in that slightly higher range now, but not a really significant move. Gold also slightly recovered towards 4,100, all because of the yields falling. Yes, focus on RBI meeting. Yeah, as I said earlier, RBI is likely to, be in line with other major central banks who have adopted a wait and watch approach. RBI had already, last month, exactly 2 months ago, on June 5th, they said that the inflation is likely to rise. Forecast 5.1% versus 4.6% forecast earlier, and the growth was also uh, estimated down at 6.6 versus 6.9% earlier. In view of the challenges posed by the possible monsoon shortfall, whether they further raise the inflation target is something that we would know. But overall, with inflation remaining around the median level for RBI around 4%, I don't think any near-term action from RBI is expected by the market. What would be of interest perhaps would be whether they make a further update on the capital flows on FCNR and other schemes, and whether there is any further policy move that they could be on their radar, which the market will be looking at. As of now, market sentiment is somewhat neutral, I would say, after looking at the numbers which was published by RBI last month, and could move, very slowly on the downside, the USD INR, because again, I see RBI not allowing a rapid appreciation of the rupee, and they would be in to absorb the flows below 95 levels. They would be happy if the rupee stabilizes around these levels, not too much of appreciation and no tendency to, weaken, more. That's what they would be happy with. So I think status quo markets, but risk assets are definitely on the move once again, despite the bond market still not out of the woods. So I think it's interesting that markets are not really worried when there is a bad news, but when there is a good news, they are rallying much more. So that's the kind of bias right now we are seeing, particularly in the US market. So let's wait for RBI MPC today and also the job market data coming Friday. Thank you.
Thank you, Jack. And just reiterating a few numbers, 2 months back in their MPC, RBI has said inflation, expecting inflation at 5.1% and growth over at 6.6%. We'll be looking at these target rates, but as of now, it doesn't seem, looking at the numbers, that there might be any near-term action. So both the rates and stats are expected to be unchanged. Oil prices, which is a driver of the headline inflation, it's very volatile, and so same problem for many countries. So might be having a wait and watch kind of approach, especially looking at the entire global geopolitical scenario where there are fresh peace efforts that are ongoing. I cannot be completely overconfident about the peace deal, but there are some positive signs, including Iran, that might allow other European countries to remove the mines in the strait. We'll follow all these updates. Otherwise, it was a very good day for risk assets. US stocks going new all-time high, Dow and S&P. Nasdaq also rose 2.5%. So good day for risk assets, and we'll see how this kind of momentum picks on. That's it from us today. Thanks for listening. We will catch up tomorrow with the fresh round of updates.